Hello everyone, Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick screen check and mic check, please? Yep. Can I get confirmation? We're all good. Right, fantastic, Adinda. Thank you for that. Happy New Year, guys. Thank you for attending my first webinar for 2016. I hope you all had a wonderful Christmas and a great New Year, and are ready to get down to making some money hopefully this year in the foreign exchange market. 2015, just a quick recap, excuse me, from a trend trading perspective was very, very quiet, but that is the natural rhythm to the markets. We cannot expect the markets to be continuously handing out money. Money in trading is not made like a 9 to 5. Money is made in periods, so we could make very good growth on our trading accounts for several months, and then for several months the foreign exchange market may go quiet. The key though is to having a big portfolio, because if the foreign exchange market goes quiet, then usually the money has moved from one market to another market. So it's always good to keep an eye out on other markets such as stocks, particularly US stocks and commodities. But there's an expression in trading which is the longer the consolidation, the bigger the breakout. And so hopefully this year in 2016, we're going to see some significant moves that will happen over potentially months. So I'm not just talking about days to weeks. I'm looking for weeks to months. These big moves in the market that we call trends, that will then go on to allow us to compound and see very, very good growth. Now, we're already starting to see movement in the markets. This is, what's the date today? The 6th of January, so Monday the 4th is when everyone went back to work, and we're already starting to see movement in the market. So what we'll do first of all is go through my chart setup, make sure that we're all on the same page and that we all understand the chart setup that I have. And then moving forward, we'll go through some analysis of some of the currencies that are currently on my watch list. And then we can end up with any question and answers towards the end of the webinar. Okay, I hope that's all clear. I hope everyone's with me. There's quite a few people in the chat room, but there doesn't seem to be anyone actually commenting or anything. So hopefully you guys are with me and you are hearing me okay. Right, so what you can see in front of you is a typical chart setup of mine. Top left corner is the watch list. Notice it's an extensive watch list. So I've got the Aussie dollar, US dollar at the top, and it goes all the way down to the South African rand, Japanese yen at the bottom. So it's an extensive watch list. Don't let that daunt you. The more you have on your watch list, the more options you have. The more options you have, the more chance you have of catching the better trends. If you focus on just one or two currencies, the euro dollar or the dollar yen, gold or a particular stock, if you just focus on one or two or a handful, those commodities, those currencies, those stocks, those instruments are not always liquid. There'll be long periods of time where those particular instruments are in consolidation, so the money has moved somewhere else. So by having a big portfolio, you can then move between one set of trending currencies to another set of trending currencies. The other thing to remember, and this is very important, is that currencies tend to move in groups. So we may see all the Aussie dollar yen currencies, so Aussie dollar US dollar, Aussie dollar CAD, Aussie dollar Swiss, Aussie dollar yen, Aussie dollar Kiwi, those group, and including the pound Aussie dollar, the euro Aussie dollar, anything that's paired to the Aussie dollar, we may see all of those currencies move. So that means over a certain period of time, several months, those are the only currencies I'll be looking at, while everything else remains in consolidation. Then what happens is the Aussie dollar, after several months of trend, all the Aussie dollar currencies will go into consolidation. And then let's say everything related to the euro will start trending. Euro Aussie, Euro CAD, Euro Swiss. So the bigger the portfolio, the more options we have. But also remember, they will only be moving in groups. So we don't need to be looking at every single currency every single day. Right, top right corner. Excuse me, top right corner, I have the monthly time frame. Bottom left corner, I have the weekly time frame, and the bottom right corner, I have the daily time frame. As I'm a trend trader and as I'm looking to hold positions for weeks to months, I need the time frames that allow me to trade like that. If I go down to a lower time frame, 4 hour, 1 hour, 15 minute, It means a lot of screen time during the day. It means that I need to be glued to my screen. And in trading, less is more. The less you get involved, the more profit you make. So by looking at the larger time frames, we eliminate all of that intraday noise. So monthly, weekly, and daily. Monthly is where I look for support and resistance. Weekly and daily is where I look for trend direction by looking for alignment between two time frames. How do I do that? Well, if we go to the next chart of mine, you'll see that I have my support and resistance levels. So I have a proprietary tool that automatically highlights, based on a particular algorithm, will highlight major levels of support and resistance. By drawing support and resistance on the monthly chart, if I just open up this chart, by drawing support and resistance on the monthly chart, I know exactly the levels where price can move towards. If you're drawing support and resistance on the lower time frame, 1 hour, 15 minute, you have a lot more candlesticks, a lot more intraday noise. So then the question is, what are strong levels? What are hard levels? It becomes very, very noisy. By drawing my support and resistance on the monthly time frame, I have a very clear idea of levels that price can move towards. In addition, I have these pink lines, so PH, PL, and PC. What they represent is the high, the low, and the close of the previous calendar year. So as we're now in 2016, this is the highest price of 2015, the lowest price of 2015, and the closing price of 2015. Very significant. A, because of support and resistance. B, they can also tell us what kind of market conditions we're in. As you can see, price is currently trading between the closing price of last year and the low. So this is very much in an area of consolidation. What I want to see is price trading below the low of last year. That will then tell me that we are in a bear market. If price is trading above the high of last year, then we're in a bull market. If price remains within this level, generally it's a consolidation. It really depends also how far the high and the low are. But in general, if price is trading between the high and the low, or between these pink line levels, then we can consider it a consolidation. Beyond that, I then look at round numbers. So on this particular scale, 0.7, 0.6, 0.5. If you're going the opposite way, 0.8, 0.9, 1, 1.1, 1.2. Those are the round numbers that I'll be looking at. The distance between round numbers is 1,000 pips. Weekly time frame, I have the 200 moving average. Daily time frame, I also have the 200 moving average. Now the the 200 moving average is used to give me a bias in price action. So when price is trading above the 200 moving average, it's a bull market, and I look for long opportunities. Below the 200 moving average is a bear market, and I look for shorting opportunities. I'm looking for price to be below both the weekly and daily 200 in the strong bear market, and above the 200 moving average on the weekly and the daily in a strong bull market. Remember, trading is about patience. We need to see all of these factors align. We want to find high probability environments where we have more chance of making money than losing money. And this is the kind of patience is where a lot of people find difficult in applying to their trading. It's a real challenge because we're so used to making money in a particular way that in the markets we want instant gratification. As soon as we find an entry point, we want to get in, we want to make money. But it's not how it works. We need to apply patience, wait for the right entry points to appear, wait for the right trading environments to appear, and then we want to apply patience as we allow the trend to develop in that time. Now, one other thing to note is I have a trend filter over the bars. So if we go to this chart, you can see that I have the naked candlesticks, red and green candlesticks on the weekly and the daily. However, on this time frame, I have a trend filter that highlights bullish trend where it's green and bearish trend where it's red. And that's the same on the weekly and the daily time frame. So what I'm looking for is a trend filter to be green above both 200 moving averages and the trend filter to be red below both moving averages. Again, adding further confluence of events. Remember, trading is about finding high probability environments. The way we do that is by having a criteria, a checklist, which we call a confluence of events. My confluence of events involves the 200 moving averages and the trend filter on the weekly and the daily time frame, as well as support and resistance on the monthly. And I need to make sure that when I enter, any particular trade that I enter meets my checklist. I go through my checklist and I tick everything off. If my checklist isn't met, I don't take the trade. It's a very simple, very straightforward, very mechanical process. There's nothing exciting about it. Trading shouldn't be exciting. I'm just going to go to the chat box Can I get, it's simple, Fabian. It's a simple 200 SMA. Can I get a quick hands up that you guys understood my logic there, please? Can I get a quick yes that we're all good? Thanks, Fabian. Okay. Can I get a quick idea of how many people are actually listening to this webinar at the moment, please? Because there's 21 online, but I don't seem to be having any correspondence with anyone within the chat room. Okay, thanks, Josh, Fabian, Claudio. Yes, but what are you doing for the rest of the day? Brilliant. Thank you, Ray. I don't understand that question, Claudio. Thank you, Josh. Okay, brilliant. Thank you. Okay, Claudio, I hope I'm saying your name correct. I don't quite understand that question, but what are you doing for the rest of the day? Oh, well, okay, so what you're asking me is what my lifestyle is like. Okay, what you need to understand is that trading is something that has to work for you in the background. Okay, so when I started trading, hi Quasar, hi. When I started trading, which was back in 2007, I was actually working full time. So I was actually a photographer. I was working as a full-time photographer, and I needed a style of trading. I was making very good money. Okay, and as a photographer and as an English teacher as well, I was a private tutor. I was making very good money. A lot of this money was just sat in the bank, and it wasn't really doing anything for me. So I wanted to achieve more growth. I wanted to see more returns on my money. So I turned to trading. Now, where a lot of people sort of go wrong, in my opinion, is that they go down the route of day trading. They feel that by sitting in front of the computer all day long, they can start chasing pips. Now, my challenge is this: if you are day trading, and if you are certain that day trading is going to return you a certain percentage every week or every month, then why would you not try to get as much money as possible into a trading account, because you are guaranteeing that you can achieve a certain growth on a monthly basis? If I knew that I could achieve 10% a month, I would go into a bank. I would remortgage my house. I would get as much money as possible into a trading account and try and achieve that 10% growth, because I'm confident that I can do that. But see, this is where people go wrong. In day trading is not about targeting a monthly percentage. It can't. It's impossible. Okay, you have to be realistic in how the markets move. Markets have a rhythm to it. They move, then they consolidate. They move, that they consolidate. Money is made when the markets trend. When they consolidate, we have to stand aside. So you may like to day trade, Claudio. That's fine. You may like to day trade, but then you have to question: is it the best way forward? Why are you day trade? Why are you trading? Are you trading for the fun and excitement, or are you trading to make money? Are you trading to make growth? Do you want to quit your 9 to 5? So you have to answer these questions. If you're doing it for the fun of it and the enjoyment of day trading, that's fine. But that's not what I wanted. I was too busy working. I didn't have the time or actually the inclination to be sat in front of a computer all day long. I wanted a style of trading that was working in the background and growing my money for me. And this is where trend trading comes in. Now, the question is, a lot of people ask me this question, which is, then what do you do during the day? Well, I'm a full-time trader now, guys. It took me 4 years to get to where I am. So I started in 2007. By 2011, I had generated enough money on my account. I had grown my account to a point where I didn't have to work anymore. So I quit photography. I quit teaching English, but I was still only working 15 to 20 minutes a day when it comes to trading. Okay, so we all have different objectives. My objective was to quit the 9 to 5 so I could be a full-time trader, but at the same time have more time on my hands. I was working 15, 16 hours a day. I didn't want that. Yeah, 200 SMA. Josh, FOMC reports, etc. I'm a purely technical trader, so FOMC has absolutely no impact on me. Okay, a lot of the times what you'll find is that news gets absorbed into the market. We are private traders. That means we're outside. We're outside of the institutions. We're outside of the hedge funds, the market makers. They get the news before us. So by the time we actually hear the news, it's already been absorbed into the market. Okay, so I wouldn't get too caught up in FOMC reports and what Draghi has to say and all these other bits and pieces. Be aware of it in terms of knowledge and conversation, sitting around the table. But don't let that filter into your trading. Let the charts dictate your trading. Let price action dictate. It's all you need to know. Claudio, I would say if you want to be busy like a job, do something else. Don't be busy by staring at the charts. That's not a life. Be smart with your time. Be smart with your money. Trading is about seeing growth. So go out, work, find something that you enjoy, but don't spend time staring at the screen all day. It's not how it's done. You have to remember, day trading is an idea that has come about because of the internet. Doesn't mean that it works. The techniques that work are the techniques from before the internet. The long-term techniques. Don't let the internet distract you. Okay, so let's go in and do some analysis. So I know I sidetracked there a little bit, guys, but I just wanted to make sure that I was talking to people. So thank you all for answering my questions. Okay, let's go ahead and do some analysis. I know there's some questions coming through, but I'll wait till the end of the webinar to answer some of them. Okay, if we look at the monthly time frame, now this is the first currency we're going to look at, which is the Aussie dollar, US dollar. Monthly time frame. The long-term trend is bearish. The long-term trend has been bearish since August 2011, where it found resistance at the round number 1.10. We had a tram tracks formation at resistance, and we can see since then that price has weakened. Now look at the way it's weakened. We had a move to the downside, quite a long consolidation, another move to the downside, long consolidation, big drop to the downside, bit of a consolidation, another drop, and now price is currently in this consolidation. However, if I just open up the chart, look at the month of January. We're seeing weakness to the downside, good weakness to the downside. What we want to see is this pivot low cleared. We want the round number 0.7. We want to see price clear this. We want to see price clear the pivot low of September 2015. This will then also clear the low of 2015. And we should then see price move towards 0.60 and then 0.50. Those are the levels that we want to see price move towards. So with a little bit of patience, we could see price cover 2,000 pips. On the weekly time frame, price is trading below the weekly 200 moving average. So price has that bearish bias. The trend filter is red. Now, if you look at the trend filter has been red since September 2014, telling us that the long-term trend is bearish. If we look at recent weeks, price has been within this area of consolidation, going back to August last year, August 2015. It's just been going sideways. However, this week so far, we've seen good weakness to the downside. We need to see this pivot support cleared and then price move towards 0.6. But the weekly is still suggesting further weakness. We just need to be patient. Daily time frame, price is trading below the daily 200 moving average. Again, we have the bearish bias. Look at the trend filter now on the daily time frame. It's red. So if we look at the weekly and the daily, we have alignment below the 200 moving average on the daily, below the 200 moving average on the weekly. Trend filter is red on the weekly. Trend filter is red on the daily. However, price is within an area of consolidation, and this is where we need to apply patience. The reason why is because there's plenty of support levels here. There's a support level here. There's a support at 0.70. There's a support here. There's a support here. So there are multiple support levels. Price is just trading within a range. What we want to see is a breakout to the downside and then a trend established. You can see that we have trend, consolidation, trend, pretty long consolidation, another trend, another long consolidation. So it doesn't, the problem with the Aussie dollar, US dollar is that it can be quite frustrating to trade. Every time it threatens to go into a trend, it suddenly goes into consolidation. So it may not always be the best currency to be trading, looking at the history, looking at the structure of this particular trend. But if price clears this support level, this will then suggest an entry point. And this is when we can start looking for shorting opportunities. Just be aware that it does consolidate. So it may not be one that you want to get caught up in. So Aussie dollar, US dollar on the watch list, and we are starting to see weakness. The next currency we'll look at is the US dollar, Canadian dollar. Now, I talked about this extensively over the weeks prior to the end of 2015. On my midweek market analysis and also on the webinars that I was doing for FX Street, we talked about this extensively. And I said, keep a close eye on this. If we start with the monthly time frame, long-term trend is bullish. Look at what's happened in November, movement to the upside. December, movement to the upside. January, movement to the upside. We can see strength on the Aussie dollar, on the US dollar, Canadian dollar. I also mentioned that when it cleared this level here, which is a 2009 pivot resistance, which became support, it found support. And I said, if it clears 1.3, then we should expect it to move towards 1.4. 1.4 is a round number. Look at what it's done now. It's broken through 1.4. It's trading above 1.4. If this holds, then we should expect price to move towards 1.5 and 1.6. If we look, it's been that high going back to 2002. Remember, guys, that's what technical analysis is all about. Technical analysis is about looking at the history of the chart and then assuming levels that price can go towards, keeping it very simple. Don't get caught up on all the intraday noise. Don't get caught up in what's happening in the news and FOMC reports, etc. Let price dictate. Patterns repeat. By understanding that these patterns repeat, it just makes things very, very simple. Okay? Remember the expression, trading is simple but not easy. Where are the challenges in trading? The challenge in trading is when holding during pullbacks, holding when market is going against you in a breather. But that's where good software comes in. When you have trend filters that tell you to be patient, it makes everything so much easier. If we look at the weekly chart, trading above the weekly 200 moving average, so we have a bullish bias. Trend filter is green. Now, if you actually look at the structure since June 2014, movement to the upside, pullback, movement, pullback, movement. It's during these pullbacks where people struggle. But the long-term trend is bullish, and that is the direction we want to be going in. Daily time frame, trading above the daily 200 moving average, trend filter is green. If I just open up the chart, if you look at this high point here, which is going back to the 18th of December, what tends to happen at these resistance levels is that people tend to go against the trend. So you'll have a lot of traders who would have seen price come to this level here and then now be looking for shorting opportunities, thinking that they found a double top. It's an incorrect approach. The easiest way to be trading is to be going in the direction of the trend. And you can see now that price has broken to the upside, and if this closes, so we need to be patient. If this closes, there's a good indication that we could see further strength to 1.5. I have positions running since around this level here. So since price cleared 1.3, which is going back to July, August, I have positions running. Now, I had to be a little bit patient and hold through this consolidation, but I have well-placed stop losses that don't allow me to get stopped out. And you can see now how these I have multiple positions. I have 5 positions running across this trend now, and all in very good profit. As this continues to create new highs, I'm going to start adding further positions. This is where that compound growth starts coming in. Always risk small, but win big. My risk is never more than 2%. So the US dollar, Canadian dollar should be on your watch list. If you're not in this, this is now setting up for long opportunities. You should be looking for entry points. Bias on the weekly and on the daily are both bullish. Trend filter is green on the weekly. Trend filter is green on the daily, and there is space to highs of 1.6, which is around 2,000 pips to the next resistance. So everything is looking good for this particular currency. I'm just going to go to the chat box. Okay, fine. Okay, let's move on. The next currency we'll look at is the CAD Japanese yen. Again, this is a currency that I mentioned over the December period. Start with the monthly time frame. We can see that the trend is bearish. Price was in this area of consolidation, which was around number 90. And I mentioned that if price breaks and closes below the pivot support of August, which is this bar right here, price breaks and closes below that, then we could see further weakness to 80, 70, 60. Those are the levels. Of course, there is support ahead, but in terms of round numbers, those are the levels that we'd like to see price move towards. We would like to see price clear these levels. So potentially quite a lot of room for this space to develop. And we can see now, sorry, for this trend to develop. And we can see that there is weakness happening in the month of January. Good momentum to the downside in December. January, that momentum is continuing. On the weekly time frame, price is trading below the weekly 200 moving average. Trend filter is red. And if I open up the daily time frame, trading below the daily 200 moving average, trend filter is red. So everything is suggesting further weakness. I have a position. I have positions rather that have been triggered on this recent move to the downside, and I will start adding further positions as and when price dictates to do so. Look at the natural rhythm to price. Look at since the around the 3rd of December when the trend filter turned red. Okay, the next one turned green, but you can see. Look at the way the trend is moving. Look at the way price is moving. Big movements, little breathers, movements, breathers, movements. That is what we want to be seeing. This is what we call a clean and linear trend structure, where we have movements followed by clean pullbacks, then another movement in the direction of the trend. Expect these breather periods. Expect them because they are a natural feature to price, but also embrace them because it then allows you to compound. Every time it breaks out, you can add another position. So say, for example, let's say, for example, this spike wasn't here. We had our move to the downside, pullback, breakout. This would have been your first position. Then you could have compounded on the next breakout. When price pullbacks and breaks out again, you can repeatedly compound. And that is how all the best traders and investors over the years have generated wealth. If you want that Warren Buffett kind of account, which is more than possible, Warren Buffett is 80 years old. He's got plenty of time on all of us. He's generated his wealth over years and years and years. It's more than possible for us to all generate vast sums of money. But you have to look at how traders and investors have made those kind of returns and copy them. We don't want to get distracted down the route of day trading. Day trading only rarely favors one person in the market, and that's the broker. Okay, we need brokers and we need good brokers, but every time you open a position, the broker always profits. Day traders make money, lose money, make money, lose money is very inconsistent. You go through a lot of effort to make very little reward, if any. Take a few trades a year, hold those positions and let them grow and keep on compounding. It's the smart way, it's the proven way. There is no need to reinvent the wheel. CAD Japanese yen should be on your watch list. Okay, let's have a look at the pound Canadian dollar. Another one that is on my watch list, but again, we need to see a little bit of patience. Long-term trend is bullish. You can see that we had a good trend to the upside. This was in 2013, a very profitable trend. Since then, it's been a little bit choppy. However, it is now trading above the figure 2. That's a positive sign. This is major support. And we're now seeing momentum to the upside. We need to see the high of 2015 cleared, and we could then see price move towards this support, which is around 2.4, potentially 2.5, and even high of 2.7. Those are the levels that we want to see this trend move towards. On the weekly time frame, we're trading above the weekly 200 moving average, so the bias is bullish. Trend filter is green. On the daily time frame, trading above the daily 200 moving average, and the trend filter is green. However, we can see that price is still within this area of consolidation. If I just move back, if I move price back to that profitable trend, look at the structure of this trend. This is where price moved from around 1.65 approximately all the way up to 1.85. That is a move of 2,000 pips. Look at the structure. You've got to embrace these little these little pullbacks, these little breathers. That is where people struggle. But each time it breaks out, you can compound. This move of 2,000 pips, I leveraged to over 10,000 pips during this trend. And that was simply by holding and compounding, And that gave very, very, very good growth. If you can imagine my stop loss being like 300-400 pips and a 2% risk, you can do the maths on how growth is made as that trend develops. So looking at current price action, we want to see that same thing happen again. However, we need to be patient. We need to see this resistance cleared, which is 2.1 round number, and then we can start looking for long opportunities. So a little bit of patience for now. Okay, the next currency we'll look at is the pound Japanese yen. All right, if we look on the monthly time frame, we can see that there is weakness to the downside taking place. It is trading below the low of last year. That's positive. It is faced with 170, the round number. But we are seeing momentum to the downside, and potentially we could see price move towards 150 and then even 140 if this bear trend continues to the downside. However, remember, we want to see alignment between the weekly and the daily time frame. If we open up the weekly chart, the trend filter is red, suggesting a bearish trend, but it's trading above the weekly 200 moving average. So the overall bias is bullish, even though the trend filter is suggesting a bear trend. For me, as a long-term trend trader, that is out of alignment. And remember my checklist I was telling you about, my confluence of events? Well, this is not meeting my checklist. On the weekly time frame, I want the trend filter to be red below the weekly time frame, below the weekly 200 moving average. So this is where patience comes in. If we go to the daily time frame, we're trading below the daily 200 moving average and the trend filter is red. So I know now a lot of people are looking at this particular move to the downside and they're saying, well, you're missing out on profit. Actually, I'm not missing out on profit because I've already got the CAD Japanese yen and the US dollar CAD all in good profit, all handing out profit. I want to be only trading the best of the best. Everything looks good in hindsight. However, the problem with this particular setup is that you're actually trading against a major trend. That means that at any moment, there is a very good chance that we could see a bounce back to the upside. If you are trading this, and if you do want to trade this, then you need to reduce your risk because you're actually trading against the major trend. So instead of risking 2% or whatever you normally risk 1% or even 0.5% because you are actually trading against the major bias, and the bias is bullish as it's trading above the weekly 200 moving average. So pound Japanese yen is on the watch list. However, until it breaks the weekly 200 moving average, I'm not interested in trading this. I'll be standing aside. Okay, and the last currency we'll look at is the US dollar Swedish krona. Start with the monthly time frame. Okay, again, long-term trend is bullish. Look at this trend. A very, very profitable trend where we made very good growth on our trading account. This was a move off from when it eventually broke out from here, which was around 0.69 all the way up to around 8.89 again. 8.9. Again, that's a move of around 2,000 pips. After every move, price consolidates. It's a natural feature. What we want to see is a breakout to the upside. We want to see this momentum so far in the month of January. If I just open up the chart, we can see that we're having momentum to the upside in January. What I want to see is the momentum continue for the round number 9 to be cleared and for price to then move towards 10 and even 11 as price has been that high going back to, what year is this? This is around 2001. So those are the levels that I want to see price move towards. On the weekly time frame, price is trading above the weekly 200 moving average. So we have that bullish bias. Trend filter is green, suggesting a bullish trend. Daily time frame, price found support around the 200 moving average. So a very good indication of how the 200 moving average acts as support and resistance. In this case, support. Okay, we had a bit of a fake out or breakout to the downside. That can happen when price is in a consolidation. But now price is back above the 200. Trend filter is green. We want to see this momentum continue to the upside. When it clears the round number 9, this is when I will start looking for long opportunities. So again, for me, this is where I'm going to apply a bit of patience. When I get the correct setup, I will start allocating risk. Okay, so those are the currencies that are on my watch list. I'm now going to go to the question box. So I can see a question here, guys. Are there any questions to end the webinar, please? Okay, so Do you know that many of your pages from your website are deemed as unsafe and you are unable to access your site? Are you talking to me, Ray? And which website are you talking about, please? Um, Fabienne, what monthly or yearly returns on your capital are you looking at compared to what drawdown? Okay, my focus is always on capital protection. I cannot determine what profit the market is going to hand out. So my drawdowns are always minimal because my risk is always small, 1%, 2%, and I only trade at certain times. So I don't have huge drawdowns. A small percentage, 2, 3, 4% are my drawdowns, but my growth when the trends are in play are substantially larger. But I cannot have a number. If I was to give you a risk to reward, I would say my risk to reward is 1 to infinity, because I do not cap my profit. I cap my losses. What most people do is cap their profits and uncap their losses. That's why they blow accounts. You want to reverse that logic. Cap your losses, uncap your profit. Just keep on allowing your trend to develop and to grow until the trend suggests an end. Okay, I hope that answers your question there, Fabian. Oh, the Traders Cosmos website, that's not online anymore. I've taken that website down, Ray. So the Traders Cosmos is not there. The websites that we have are the dynamictrader.com. The Traders Cosmos is an old website. I'm not quite sure what you mean by it being unsafe. Are you talking about in terms of taking payment details, or what exactly are you talking about, please? If you can drop me an email, I'd rather not waste time talking about that on here. But if you can drop me an email, which is zaheer@tdtpro.com, I'll just put that in there. If you want to drop me an email there, please, Ray, I'd appreciate that. Okay, guys, are there any final questions before we call time on today's webinar? Remember, there's an NFP out on Friday. The way I trade NFP is I don't trade it, plain and simple. My computer is now closed. It's Wednesday today. My computer will be closed until Monday. I will not be looking to take any positions until NFP has passed. So I hope that makes sense. And you guys follow suit. Don't get caught up in chasing a few pips on NFP. Okay, Fabian, as already mentioned, I don't target a monthly return. It's impossible to target a monthly return. I only trade when trends are in play, and the percentage returns that I make, I don't particularly talk about them because it's irrelevant. The percentage returns that I make are dependent on my risk, on my risk allocation, how I trade my trends, my stop management, my exit management. It's not something that I divulge. It's not a kind of information that I give out to people, but it's significant. It's significant. It's life-changing sums of money. This is compound growth, and I've been doing this since 2007. When you click on a page, it produces a red page and informs you that it is unsafe. Okay, I'm still not 100% sure what you're talking about, Ray, but thank you. Okay, thanks, Fabienne. I'll have a look into that, Ray. Thank you for informing me, but I'll have a look into that, okay? Thank you very much. And it's the first time someone's actually said that, so I don't know whether that will be a local issue to you, but I'll double check that. Thank you, Ray. Okay, guys, I'm going to call time there. I'm going to direct you to a few web pages. Now, first and foremost, actually, I need to share this, don't I? I'm still kind of getting used to this. Okay. Okay, so you guys should now be able to see can you see my Google browser, please? Can I get a quick yes that you guys can see my Google browser? You should be seeing the chat box now. Yeah. Anyone there? Can you guys see my Google browser, please? Can I get a quick yes? Yeah. Okay. Brilliant. Thank you. Right. Okay. So first and foremost, guys, if you go to this website, it isn't 100% complete yet. This will be completed at some point today, but I have created a course where I will be training people in the art of trend trading. Now, what this will involve is access to some of our software. I will be I'll be training people in exactly what technical analysis is about. There's a lot of noise and clutter out there on how to use candlesticks, how to use chart patterns, the logic behind support and resistance. So on my charts, on my monthly chart, you saw a support and resistance tool. There's a logic to it. There's an algorithm to it. I'll be explaining how to draw support and resistance on your charts. I'll be giving you access to some of our proprietary software. So all of this information has been streamlined into a course. Now, this is an online course that will be most likely the first day will be at some point at the end of next week. I'm looking at either Saturday or Sunday. It's going to be a 4 to 5 hour online training course. And also, as part of that course, you will be part of a community. So I've created a community where you will have access, where you will be able to perfect the information that I will be giving to you in that 5 hour training session. And this is training, guys. This is not a signal service that I'm going to be popping up at you. This is actual full training so that you will then be able to put this into practice. The whole idea behind the training, A, is to really get you guys on the same page when it comes to trading, but B, is to also emphasize the importance of good software. A lot of people are using free software out there, MetaTrader, for example, or maybe some software that their broker is giving them. You guys have to get away from looking at free software. You need proper software. There's no industry out there that thrives on good software. There's no industry out there that thrives on free anything. It doesn't matter what industry you're in. You could be a football player, you could be a photographer, you could be an English teacher, you could be an accountant. Every industry has specialized equipment. Trading should be no different. The idea of free software is really to kind of rope individuals into trading so that they just open an account and they start trading. You need to look at this as a business, and a business needs investing, and you need certain elements. Good software is one of them. So along with the training that I'll be giving people, you'll also be getting to appreciate what good software is all about. And that will involve subscribing to eSignal. However, eSignal is free for 30 days. So you don't actually have to pay for it. You'll get access to our software free for 30 days. After that, if you choose, you can then upgrade to eSignal. And it's not expensive. eSignal is like $45. I want to make something very clear here, guys. I'm not associated to eSignal. I don't endorse them. I use them because they are the best in the industry. But for each person that signs up to eSignal, I do not profit from them. I'm encouraging you to use eSignal because it's the best in the industry. I don't have any IB agreement, so I don't encourage you to open up a broker so that I profit from your trades. I'm a neutral trader. However, as a full-time trader, and I understand a lot of you guys want to be full-time traders, I'm guiding you and advising you on what is the best way forward. And eSignal is by far one of the best way forwards. So as part of the course, it will involve subscribing to eSignal, which I said is free for 30 days. The course itself is going to be £179 plus, £159 plus VAT. £159 plus VAT for a 30-day training course. Okay, so please keep an eye on this link. If that's something that you guys would be interested in, please have a look at this link, which is videos.apprentice.live/login. The actual payment link is not up yet, but there will be other bits and pieces of information up there, which you will be able to start looking through. Okay, there'll also be videos, etc., everything that goes with it. There'll be a whole training that goes into this. If you're not following me on Instagram, please follow me on Instagram. I put a lot of information up on there. Instagram.com/fx.mentor. That is my Instagram handle. The Dynamic Trader website, please have a look at that. And the dynamictraders.com, that is a free blog site where we put a lot of free information out there. Okay, guys. It happens on... Okay, guys, I think that is it. It is now 4:45. Thank you all for your time today. If you want me to email you when the payment site is up and ready, please email me. I've already put my email there, which is zaheer@tdtpro.com. Please stay in touch with me, and I can help you then with when the actual payment site goes live. Okay. Thank you all very much. Thank you for your time today, and I will hopefully see you all on next week's live webinar with FX Street. Thank you all. Take care. Bye-bye.